Let's talk to Bryan Noble. He's from tradernoble.com. Very good morning to you, young Bryan.
Thank you very much for having me.
Right, you've been writing market reports on a daily basis since I met you. Obviously, extraordinary volatility this year, but we were saying off-air, FTSE 100 rallied 900 points over a number of weeks. How do you cope with this?
Yeah, it's good. I mean, if you look at the Dow's rallied 1,500 points in the last 7 trading sessions. Incredible stuff. We've gone up 8 days in a row in the Dow, which is the first time since last September when we had a 9-day winning streak. The VIX is down with a 12 handle. In fairness to Trump, I mean, they love him in the States. His popularity has gone up to 65%, on par with Reagan. He managed to get North Korea and South Korea to the table. He's cut the corporation tax down to 21%, and love him or hate him, they all love him in the States. And he's got this, everybody believe him behind him. The goodwill factor, getting the 3 guys released from North Korea as well. So he can't do anything wrong at the moment. And in fairness, he's the only politician that I know who's promised he's going to do X, Y, and Z, whether you agree with it or not, and he's implementing it since he got in.
Well, they're talking about him being in line for the Nobel Peace Prize now.
Yeah, that was incredible.
Which, raised a few eyebrows.
Obama would love that one.
Yeah, there's a thought. Right, in terms of the markets themselves, the technicals, okay, have given a number of sell signals this year. Generally, anyone taking a structural short's been wiped out. Okay, is the trend your friend? Don't buck the trend. Is this onward and upward?
Well, it's incredible. The whole of this year has been about the 200-day moving average. We've briefly broke it a couple of times. The market sold off, but any time we've gone down, it hasn't stayed for more than a couple of days. If you go back to last Thursday week with the Dow and the S&P got down to 25.91, broke the 200-day moving average by 20 points, and then just went whoosh up 150 handles since then. Once we broke back above the 200-day, anybody who had shorted the market had to scramble for shorts. Of course, initially people didn't believe it, and then it's just rallied and rallied. We got to the 50-day moving average then at 26.75, and that sort of stalled it for a couple of hours. And then once we went through there, we just went straight up another 70 points.
Right.
So, technically, as long as we stay above the 200-day and now the 50-day, which is the initial support, kind of around the 26.80 area, for this the 200-day now comes in at 26.20. We really need to see this break for a few days for this market starts to run into trouble.
The textbooks, so it's difficult to say what constitutes a break. Is it 1, 2, 3 days close below? Is it 1 to 3% below? What would you sound cautious on if it does break, okay, to give it some breadth, I assume?
Yeah, you kind of have to wait 3 days, but a problem that 3 days it could do 100 points.
Yep.
And if we go back to not last Tuesday, but the previous 2 Tuesdays, the Dow fell 400 to 500 points in an hour on both of those days before rallying a couple of days later. So, it's very hard to be short. You're going against capitalism. Even though the market's overvalued, the earnings results have been incredible. Despite the earnings results coming in, the market actually sold off, so a lot of it is actually built into the price, but it's very hard to book the trend, and even the dollar has turned around. I know
yep.
The dollar, which the dollar's moved kind of 5% since February, so people are buying the US assets.
Just to wrap up, okay, in terms of high conviction, what's your highest conviction thought at the moment?
I think the S&P is going to run into trouble between 2750 and 2800. I think this is just a bear market rally. We are in the sell in May, go away scenario. We are in the week 6 months. But the things have got overdone. So I think it'll be interesting to see how we cope when we get up to this 2750, 2800. Against that, as the levels I mentioned earlier, to watch the 200-day moving average is obviously key for the Dow and the S&P. If we do break that down, we can go back and challenge the February lows. But we need a catalyst at this stage. As you said, the DAX has moved 900 points. The DAX has had a phenomenal 12 to 1300 point rally over the last couple of months. So it's just been buoyancy everywhere.
On that note, let's go and buy the market, as they say. Bryan, as always, thank you for your time.
Thank you, Nick.